All right.
Okay.
Now,
So great. Thank you for joining our webinar today, Planning for 2021 and Beyond, Data as a Top Priority. My name is Josh Herrenkohl. I'm the Senior Managing Director at FTI Consulting, and I lead our real estate business transformation practice. And I am joined by two true luminaries in the data space, LD Salmanson, who is the founder and CEO of Cherre, and Michael Mandel, who's the founder and CEO of CompStak. And we have what I think will really be a great conversation and discussion for you today on the topic of data, both in the context of COVID and the pandemic and the financial crisis that we're in the midst of, but also the future of data and what does it look like going from here. So, maybe I'll ask both LD and Michael to maybe do a quick introduction of themselves and their organizations. LD, we'll start with you.
Definitely. So LD, one of the founders of Cherre, and thank you, Josh, and everyone for joining. For those who don't know Cherre, Cherre is a data management and analytics platform for real estate data. And our job is to help the largest asset managers and investors in the world connect all their disparate data from any source and make it immediately actionable for investment analytics. We've been around for a little over 4.5 years, and we've been working with some of the largest institutions in the world, and really happy to talk a little more about that today.
Great. Michael?
Thanks for having me. I'm Michael Mandel. I'm co-founder and CEO of CompStak. And we are a real estate data company. We crowdsource commercial real estate data. So we have a network of about 30,000 commercial real estate brokers, appraisers, and research people within real estate brokerage firms who share data on CompStak, in particular lease comps, sales comps, and property data. They earn credits for sharing that data, which is like a virtual currency, and they can use those credits to get other data back out. And then we sell subscription access to that data to commercial real estate investors, lenders, banks, private equity funds, hedge funds, sovereign wealth funds, insurance companies, what have you. Effectively what we're offering is lease comp data, sales comp data, property data, and then we have an analytics layer that sits on top of all of that information. We've been around now for almost 9 years, which is crazy. It seems in the grand scheme of things. Happy to be here and talk more about data.
All right, great. Well, thanks, Michael. Thanks, LD. So let's go ahead and just dive in. Look, I think 2020, by any account, has been an unusual year. And of course, the real estate industry has been no exception. LD, let me start with you. I mean, what have been your most interesting observations from industry data over the course of the pandemic?
I think maybe the most interesting observation is actually that things are not as surprising as you would expect. We didn't see anything that didn't play out in a way that kind of is what you would predict given a certain type of scenario. So what we didn't see, for example, is really big surprise. We've seen retail continue the way we expected to play out, right? Retail was struggling before the pandemic. It will struggle after the pandemic. And during the pandemic, it will struggle much more than everything else. And again, putting aside maybe omni retail or certain types of niche retail that actually do benefit from some of this pandemic. And I think we're not surprised that people need to live somewhere. You need to live in a house, and you live in an apartment, and you can buy it or you can rent it. But these are the options we have. And given that, it's kind of a zero-sum game, and there aren't that many places we can go because we don't tend to invent new cities as people. It takes a really long time to create a city. So we're just kind of moving around in a zero-sum game during this period. And we're also not surprised to see, commercial real estate trying to figure out what's going on, right? Because we're sort of in this holding pattern. But that's also not surprising because we've been asking, what does commercial real estate need to be for a while? Is an office space something that needs to have a lot of cubicles, or is an office space and kind of a shared, hub and spoke? But we've been asking these questions for a while. The pandemic just made them more acute. And finally, I think within the core industrial space, we just got this beautiful sneak peek. And if there's ever a place where I would say we're a little surprised to see some action, it's how little action is happening right now by some of the other players, right? So we can see the Amazons and the Walmarts, really making big moves because they just got a sneak peek into the future. What we don't see is everyone else making big moves right now. And that's a little surprising. It might be just waiting to see things play out, but I think that most of the other industrial players are going to start putting a lot of effort into where do they put their locations, specifically large logistics locations and last mile delivery, and how does that play into a new world, which is clearly going to be more retail, online retail focused.
Yeah, interesting. How about you, Michael? I mean, you guys with CompStak, I mean, you've got really unparalleled visibility into data around comparables data, right? And what have you been noticing, and what are some of the interesting observations you've seen around data over the last few months?
Yeah, well, I would agree with LD that nothing is like earth-shatteringly surprising, right? I mean, retail is completely dead. I mean, but everybody would expect that. I would say one thing that's a little bit surprising: industrial rents actually have gone down a bit. I think everybody's been talking about how strong industrial is, but our data would say industrial's not really hurting, but it's not stronger than it was. It's probably a little weaker than it was. So industrial's not immune to this. Although, to LD's point, Amazon has been leasing left and right. I mean, they are absolutely going crazy. The office market is hurting. We're not seeing that big of a shift in rents because there's just fewer transactions taking place, but there has been a shift in rents, and we've actually been able to see specifically in transactions, particularly in Q2, we saw these deals get done where the comps were coming in with the pre-COVID terms and the post-COVID terms. And you could actually see the difference because they negotiated them before COVID, but signed the deals during COVID and had a drop off. I think the most interesting stat we've seen is in effectively what we're kind of calling 2020's new concession, and that is delayed commencement dates. So when you think about calculating net effective rent and thinking about concessions from landlords and tenants, it's the net effective rent calculation is looking at the average rent, maybe applying a discount rate, and then netting out the free rent and TI. Well, now we've got this new concession, which is delayed commencement. The average time between lease execution and lease commencement historically has been around 90 days. In Q2, I think it went up to 120 days, and in Q3 it went up to 127 days. So we've got 37 additional days in delay between lease execution and lease commencement. Now, it's super interesting because it's effectively a new concession, but it's not really an earth-shattering thing when you think about it, right? The tenants, they don't care if they delay their commencement because they're not going to put people in the space, so they don't need the space to actually take advantage of the free rent period while they're in it. The landlords know that if they don't sign a deal with this tenant, nobody else is coming along anytime soon, so they don't have a problem delaying the commencement date. So they mutually agree to delay the commencement date. The landlords are happy to do it because it doesn't make their net effective rent look lower, and it's a win-win. And so, but I think it is interesting that maybe we should be thinking about that in terms of an actual concession, because it's certainly time that the landlord is not getting paid.
Yeah, that's really interesting. LD, let me come back to you. I mean, I think knock on wood, right? We've got a few vaccines around the corner here. Hopefully, we're sort of on the back end of the crisis that we're in. And we're going to start to look back, right? And when we do, what do you think are the biggest lessons learned? What are going to be the takeaways from this period that we should take into the future?
And clearly, we were caught off guard as a world, but I think as an industry, we were caught much more off guard than everyone else, right? First and foremost, because we are physical spaces, right? So within an industry which revolves around physical spaces, not being able to enter a physical space is clearly more acute in our end. But more importantly, as an industry, we've been a lot further behind in being able to make decisions fast, right? We make really slow decisions within the real estate world typically, right? Historically, not broadly, but that's clearly going to change, right? We've seen this situation where when we came into pandemic, most of the companies, and this as well as I do from the companies you work with, didn't have systems in place to be able to answer basic questions. How many tenants do I have in place? What's my renewal rate? These things should be very simple. They can't even answer a simple question. What do I own, right? Simple question. What do I own? How many units, right? What am I collecting? These are really tough things to answer. And it's not that I'm trying to belittle these players, right? They're the smartest players in the industry. It's just really, really hard to answer given the existing infrastructure. And as a result, we were mostly caught off guard, unable to react quickly. And we're still kind of in that shock state in certain parts of the industry, but are still not really figuring out how to come back and trying to reinvent themselves. And I think that's not going to happen again, because the smart players, they're just never going to let that opportunity go to waste, because had they had these information systems in place in the beginning of the pandemic, like obviously the clients that we know well, they take advantage, right? They're able to go out and buy properties that other people can't even look at right now because they don't have the wherewithal to as an organization to be able to source. They don't have the data available to be able to answer those questions, right? That's not going to happen again, because next time around, those who are unprepared will get weeded out of the system because they're not going to get the grace period they got this time around, which is, well, we're all in the same boat. A few people are way ahead of the curve and they'll make bank, but the rest of us will kind of do okay. The industry is just not going to give them that kind of leeway the next time around.
Yeah, and it's interesting, right? Because I think every crisis, right? I mean, I think back to 2008, a lot of the same things were talked about as well, right? And some organizations really did act on it, but there were a number who didn't, and I think regretted it as we kind of moved into this very difficult time.
And those organizations today are the largest in the world by far. The top 3 that made all the moves then, we know the names, are the biggest today.
Yeah. Michael, let me turn it back to you. So, when we think about, past downturns, right? I mean, we're at the tail end of this pandemic, or at least, we're sort of on the path towards being able to see the light at the end of the tunnel. But are there, when we look back at past crises, are there any lessons learned that we still can apply to this crisis?
Well, I think that, to LD's point, everybody was taken by surprise. But at the same time, if you look at past downturns, in every downturn, everyone is taken by surprise. If people were, or most people are taken by surprise, maybe a little higher percentage were taken by surprise this time. But I think realistically, like, if everybody knew what was coming, the downturn maybe wouldn't happen. And I think that the reality is, in the last downturn, it was a recession brought on by the financial industry, right? And so New York City got hit very hard because of very heavy concentration in financial firms. Whereas, in this time, it's more, Main Street that's getting affected than Wall Street. I think that one thing that New York has benefited from since the last downturn is that, from a real estate perspective, there's a much larger diversity in tenancy in New York. The financial district in New York is no longer the financial district. It is very, very diverse. And I think that if there's a takeaway here, it's the same takeaway probably from the last downturn and previous downturns, which is that diversification helps alleviate risk. And, there's the retail REITs have gotten destroyed. We're seeing a lot of our, we've seen a lot of our clients who were Class A core office investors now looking at multifamily, looking at industrial, looking at other asset classes. Everybody's trying to get into more asset classes, and it makes sense. I mean, diversification is maybe the only surefire way to alleviate risks. Does it alleviate upside in some capacity? Sure, it can. But I think the only way to protect yourself against a downturn, because you can't naturally anticipate a downturn or what is going to cause that particular downturn, because they're all different, is to be to diversify.
Yeah, no, that's really interesting, Michael. Let's move on to probably my favorite question to ask of folks like yourselves who've got a lot of visibility into the thinking of real estate companies that are out in the market. That's around use cases. And so you guys have both very powerful platforms and technologies in each of your tools that you offer to the market. What have you seen as some of the notable use cases, right? So organizations that kind of came into this pandemic, how do they use data differently through the course of this pandemic and the financial crisis relative to perhaps what we saw prior? LD, let me direct it to you first.
Yeah, sure. So, I mean, it starts with the basic building blocks. So a lot of folks prior to the pandemic didn't have a single unified answer about anything in their company, meaning there were a lot of fragmented silos of data systems that didn't speak to each other. And it made it such that making basic decisions within the organization, regardless of some of the external data they start pulling in, just being able to say, okay, we're looking at an area that we haven't invested in the past, and we want to try and get a sense of what those comps look like. Okay, I'll buy some of those from CompStak, and I'm getting a little smarter. Now I can start talking about that. What if I'm in a market where I'm already in and I want to expand? Well, shouldn't I be able to use my own data as well as part of that equation? I mean, I have some data there. I mean, I have some properties there, and I have some rents, and I have some other information. And the answer is I can't. I can call that part of the house and have them, rattle off a number for me, but I really don't have an easy way of connecting these systems. If I'm managing my leases in VTS, it's really hard for me to put that information to Argus and pull back, or into Yardi, into my accounting system, right? And not even to mention all the external data sets I'm pulling out. So that was kind of the easiest for them to say, okay, we need this. The more interesting part has been more about what Michael was talking about a second ago, is folks who are in certain industries and looking to expand. So folks who have been in office for a really long time, for example, in New York, and for the first time are looking for multifamily in, Colorado or Georgia somewhere, right? And these are new trends for them. And for them to be able to invest in those places where they're typically broker driven, right? They're used to getting a deal from a broker and analyzing it. Well, now I can't really analyze the way I used to, right? I have to think of this new way to figure out how do I understand what the property looks like, the community, the things around it. And I have to take a lot of really cool data, comp data from CompStak. I have to get some of the basic core property data. I have to figure out maybe demographic data around the area. I want to look at foot traffic from companies like SafeGraph and Unicast. And I want to get, ADP data on, who's moving in and who's moving out. And I want to connect then, RCA and Reese and Moody. I want these data sets to be able to answer a simple question that I already have. I just want to be able to answer it across those data sets, because otherwise I'm getting a very fragmented answer that I'm never going to trust. And we've seen some really cool things. We've seen people predicting new markets that are coming out. We've seen people working very actively in the industrial space, trying to predict where places will be cheaper to operate in the long run. We're seeing people betting on office spokes, meaning models that are more horizontal than vertical. I don't know if that's going to be a very successful future. I have some mixed opinions about that, but we definitely see people looking at where demographics are shifting and looking at commute trends and trying to understand, can they build those campus-like, more horizontal environments? And that's happening right now all around New York, by the way. You can see that in Jersey, some really cool properties coming up. You can see it already in Brooklyn, right? That we've been kind of fighting off for years. So those are kind of the cool things we've been seeing people do with data over the last few months.
Yeah, thanks, LD. And you guys, I think one of the the really cool things about Cherre is the fact that you guys have built a platform that's able to pull data in from all those disparate sources, right? It's I think there's been a huge need in the industry, one that you've really sort of answered in many respects. And so appreciate the perspective on the use cases. Mike, let me turn it over to you. You guys, similarly have a really cool platform in the sense of just being able to crowdsource data, right? So one of the big challenges around the industry has been around transparency. I think you guys really start to answer some of that, the questions around that by being able to really pull data from multiple different sources, right, around comparables and so forth. What are you seeing as it relates to, to use cases and some of the more notable use cases?
Well, the first thing we saw happen was that people were looking at our analytics and trying to go back 15 years or so and look at the last downturn. So it's like, okay, let's see what happened in the last turn. Everybody wanted to predict, is this a V-shaped recovery or a K-shaped recovery, or I don't know, whatever shape you would like recovery. And they're trying to see what happened in the past and how can they predict what's going to happen. I don't know that it's very easy to understand. Certainly, this is a bizarre, kind of, downturn and recovery, because who knows if we're in a downturn or a recovery. I don't even know. The stock market's at an all-time high, but everybody's unemployed. It doesn't make any sense. It's really kind of strange. But in any event, people were looking at that. People are much more interested in risk exposure. And I think to LD's point, like understanding the nature of their portfolio and the tendency of their portfolio and benchmarking that against the industry. And so we have a new tool that we're beta testing with some clients right now called Portfolio Analytics, where we allow them to see their portfolio actually using our data, because we have a lot of data on the individual clients, and then also benchmark against the market. And so people are looking at things like, who are the biggest tenants in my portfolio, and are there ones that I think are going to be more risk than others? What industries do I have more exposure to than others? And try not to get caught off guard, on a go-forward basis, or thinking about probability of people renewing. What kind of client, what kind of tenants do I have that may not renew, that I should be thinking about? So that's been a real consideration. And I would agree with LD that this, wanting to understand the market data and your own data alongside each other is absolutely critical, to evaluating risk. And then, one other trend we're seeing is that we've had more interest from hedge funds than we've ever had in the past, because hedge funds thrive on it, instability in the markets, and so they're trying to take advantage of it. And so that's been a good upside. There's certainly have been other real challenges to go alongside it, but that's been an upside.
That's interesting, Michael. Let me stay with you for just a minute and ask you to kind of put to look into your crystal ball a little bit and talk about the use of data post-pandemic, right? 2021 and 2022, 2023. How do you expect that companies will think about data and use data differently in the post-pandemic days?
I think and I hope that this need around risk exposure is not going to go away. That people are going to realize that they need to be thoughtful about understanding their underlying risk on a go-forward basis. Even if there isn't a recession, even if there isn't a downturn, there's still risks in your tenancy. There's risks in your market and your industries, in your asset classes and all of these things, and being more thoughtful about understanding it. And to LD's point, I mean, some investors don't know everything they're invested in. We've heard from some of our biggest lender clients from major banks that they don't know everything they lend on. And so getting a handle on what you have in your portfolio and how that compares against the market, I'm hoping that will be a long-term effect. That people will start investing in that now, but that they will continue to invest in and over time. The other thing I would say is that when times are good, you can, particularly in the real estate market, you can make crappy decisions and still look like you're really smart. When it was hard not to make money in commercial real estate over the last several years. Now that's not as much the case, and so people have to make better decisions. And I think that so more of a focus on the data and making decisions off of the data is going to be absolutely key. And I'm hoping that lasts, because that's good for us and good for LD, good for all.
Yeah, and let me ask you, LD. I mean, similar question with a slightly different twist, and that's around the evolution of the real estate industry and the impact around data, right? I mean, I've been in this industry for 20 years, and I've seen a significant evolution. But to both of your points, in some respects, there's still a very basic level of data usage, right, across the industry. How do you expect data to become more important as the real estate industry continues to evolve?
Yeah, and to Michael's point before, when the market goes up, I'm brilliant. When it goes down, it's the market's fault, right? Yeah. And I just cycle between funds and I'll just manage another fund somewhere else. There's no way of benchmarking, really, right? I think to your point, we're very much in the early days, right? And again, at Cherre, we've spent a lot of time here, as you know, working on things that are not even we have really cool technology things behind the scenes that make all the things that we do possible. Nobody cares about that. The real challenge here really is making the business model work, is being able to make all that data accessible to our clients, right? Because up until now, they have had access to certain data in certain applications. The challenge is they haven't been able to get that data out of those application silos and be able to use it in kind of a simple answer, right? Show me all of my properties that have exposure to Gen Z. I have this theory that they're moving back in with their parents as a result of the pandemic, and just show me all my buildings and show me all the ones that have higher exposure to Gen Z. I can't answer that question if my data is not connected, but if it's connected, that all of a sudden becomes the easiest question ever. And by the way, you can do that on our platform. I want to know what my exposure is to Michael's point a second, to law firms, right? I think the law firm industry is on decline for whatever reason. Nothing to do with any pandemic. I just want to sense, where am I planning for the future? Are law firms growing in this area? They're not. Let me see what that looks like, right? So there's a lot of basic things that we're working on. And we really wanted to, our mission really at Cherre has always been to make that accessible to our clients, right? We're not smart. We don't pretend to be smart. We don't know what the future is with regard to any investment. Our job is to give our clients the most amount of context and make all the data that they need to be able to answer those questions available to them. Not you have to go sign some special form, not you can't, it's just right there, completely connected, so you can use it and immediately answer your questions, right? And to be fair, that's still the early days of the basic stuff. So for the vast majority of our clients, the next year, it's not going to sound that exciting, but it's still going to be very prolific. It's just going to be basic joins, as we would call them, Just give me a few tables that otherwise I couldn't connect together in any other way. Just connect those and let's answer some really basic questions that up until now we thought we knew the answers to, but now we'll actually know the answers to them, and they'll be real, and we won't be able to say the market, or we'll be able to answer how we perform. Some of our clients, obviously the hedge funds, of course, leading the way, do a lot of predictive analytics around, who might be in distress, who might be in default, which assets, I can probably get at certain prices. We're not going to see that from most of the market in the next year. That's going to come a little later for the rest of, I would say, the bulk of the market. But just being able to answer the basic questions for most of our clients right now is worth billions of dollars for each of them. And that's a huge, exciting catalyst for us and for companies like CompStak and everyone who has really cool data in the industry, because all of our clients are going to use us more, and all of our clients are going to get more value of that data, which is exciting to us as the people making that available. The more they get value, the more we get excited, right? So I'm really excited about that.
Yeah, and we've also, I think we've hit this period where speed is really important, right? Being able to access data to understand the dynamics of a potential investment opportunity, right? And being able to do that quickly, and being able to sort of beat your competitors to market is going to be a really important aspect. So it's also been interesting to me about how we've moved from really data as a back office application to more of a front office application. LD, let me stay with you for a minute and ask you a little bit about, I think, an issue that's really haunted the real estate industry for as long as I can remember, and that's around standards, right, and the lack of transparency, right? And I think in some respects, even if we had a perfect panacea of architectures, right, with all the data we could ever imagine, we're still sort of plagued with this issue around the lack of standardization across data definitions and so forth. What are your views on that, and how has it impeded some of what we're trying to do in the industry?
Yeah, I don't know how I answer that without pissing someone off. So whoever I'm going to piss off, I want to apologize. I mean this in the good way, what I'm about to say. Whoever you are who gets upset. Standards do a lot of good things. They allow us as disparate entities within an ecosystem to work together and give our end users higher value. They aren't always necessary. Sometimes things are obvious, right? So within hospital systems, we have a patient ID, we have a doctor ID, we have a hospital ID. They're already kind of primary keys naturally for everything because it's a highly regulated industry. And then that becomes essentially the standard by which data starts flowing through those systems. It kind of gets its own architecture. In the financial services industry, FIX has been that for many years, right? And FIX has done a really good job together with some other organizations, obviously, and really regulated, how do we transfer money and instruments between different parties, and what is a QSIP, right? And these types of core issues. We've been way behind in the real estate industry, and it's not as easy as it sounds to fix, right? So we can't go back to, the Crown and say, hey, I know you recorded some stuff during King John, during the Magna Carta, but we want you to reclassify that as a parcel instead of what you classify as. You can't do that. You inherit the system as is, and you have to kind of figure out what that world looks like. And that means that standards become a lot harder because they have to work back in time, whereas most standards typically are forward facing. In the residential, we're in a commercial space, so we kind of forget that there's this giant world of residential there, which is the bigger market. And also there's a lot to learn from it because multifamily is essentially residential in a certain way. And commercial single family homes is a huge market right now. We can see that in Blackstone, some other entities. Residential's done much better, right? So we're part of RESO, the Real Estate Standard Organization. It's a really great organization run by people who are extremely passionate about making the world easier for the people who consume data. It has a lot of challenges, like every standard organization, but they're very, very good, and they really help standardize the listing information. That's all they standardize. The list, the ad coming from the agent about what this property is. A lifetime of work just to standardize that one tiny little thing. They've done a really, really amazing job at it. We have a much bigger challenge, right? So if we think about how much it took them to do that one little thing, again, I'm belittling that one, it's a huge thing, but compared to the world that we have to deal with, it almost feels like our challenge is insurmountable in that sense. Oscar has done a lot of work over the years and hasn't been able to really kind of force those standards because, again, you can't force standards onto technology firms that really don't want them. And that's kind of been the challenge. And what we've taken is a slightly different approach. We've said, okay, you're going to have Argus and Yardi and MRI and RealPage, which are all really good systems, right? And it's not our job to tell our clients which one's good or which one's bad or which one. They're all good for good use cases. And frankly, we're not the people who are going to make that decision anyway. They're different use cases. Our job is to say, given whatever environment you took, our job is to make them connect with each other in the best way possible for you. We can adopt certain standards. You want to put it into an Oscar model, we can map to a Oscar model. You want it into a Riesel model, we can map to a Riesel model. We can also give you our standard model, which we think is the most successful for the thing. Because again, we see these data sets like others have never seen them before, and we think it's the most efficient. To your point though, it's definitely going to break for some users. And our job is not to say, here's a standard, it's God. It's to say, here's the reference model. How could you change it? And the answer is we have to make it flexible such that it can work with everything. You can add objects, you can remove objects, you can edit objects, you can remap them. You have to give clients the flexibility to change everything such that it can map their internal system without having to conform to standards. And that's the methodology we took. I'd love for there to be a standard. It would be awesome. I don't see that coming in the near future. And as a result, we took the methodology of more of a, let's make it work with a lot of flexibility to change things if it's not exactly what they need.
Great, thanks, LD. Yeah, I don't think you angered too many participants, so we should be good. But Michael,
We'll
let me turn
after.
it over. Let me turn it back to you, and let me ask you the same question. I mean, what are the challenges that you see around standards, and how do you see it impeding the industry going forward?
Yeah, well, so our philosophy here is very similar to LD's and Cherre's. And to be perfectly brutally honest, I'm a little bit torn on this, right? Because we've built a real skill set around normalizing really, really disparate data. And so that's inherent to our value. It's also inherent to Cherre's value. And so the fact that there isn't a unified standard for this, for this stuff, to be perfectly frank, serves to our advantage, serves to Cherre's advantage, right? And we can't pretend like that's not the case. That said, I mean, for us, core to our mission is increasing transparency in commercial real estate. I expect we will get there over time, and there will be more consistent standards. There's also a reality to the fact that there are standards on a very kind of micro level right now, on a market by market or sub-market by sub-market basis, where things are very different, and people are used to seeing things in a certain way. So for instance, like, rents in San Francisco are quoted per square foot per year. Rents in the greater Bay Area outside of San Francisco are per square foot per month. And that's just the way it is and the way it's been forever. And you think they'd be very incentivized to make it consistent. They're right next to each other, and yet they don't. I think it's like in Dallas, they call, leases full service, whereas in other places they call them gross. In some places they call them full service gross. In some places they call them just full service, just gross, or both. I mean, it's like everybody has different terminology that they're used to using in different markets, or modified gross for there's 500 different types of modified gross leases. There's no standard for rentable square footage in an office building in New York, but there is the BOMA standard that's used pretty much everywhere else. But the New York landlords are not embracing the BOMA standard, because the BOMA standard would give them 23% loss factors in places where they have 35% loss factors, and they're going to make a lot less money. So there's going to be a lot of resistance for a lot of different reasons to standardizing these things. And but I think where you are going to see more consistency is as companies like ours grow and more people are piping their data through ours, we are going to create the transparency. And I think that that's a good thing, because I think that when you, and not to knock on Oscar, to LD's point about kind of, pissing off people here, I don't think in most cases that consortiums or third-party nonprofits or whatever of different sorts, often are successful in driving these kind of things. Profit-making institutions that have money to be made by doing it tend to be the winners at the end of the day. And so I think as long as companies like ours, continue to drive our own success, we're going to move the industry forward in that capacity. And the fact that we work together and are as partners also expedites it, because we're both incentivized to make it happen. And so it'll happen, but, and we hope we'll be a key part of that happening, and that'll be better for everybody.
So Michael, let me stay with you and switch gears a little bit and talk about data in the front office versus the back office, right? I think, traditionally, data has been a topic in the back office. It's been around reporting, it's been around analytics, it's been around risk management. I think, you guys with CompStak in many respects have really sort of used data as an accelerator, as a advantage, right, for the front office. Talk about that a little bit. And what do you sort of see as the trend in that space? Do you think we're going to see more applications, for front office?
Yeah, absolutely. I mean, interestingly enough, for us, I don't know, like I said, we're about 9 years in. We probably didn't get into the back office until a few years ago. We were entirely front office. We were leasing teams using our data actively for leasing, acquisitions people actively using it to underwrite investments, asset management teams, maybe that's somewhat back office, I guess. Now we've got a lot of research teams using our data and economics teams and data scientists and stuff like that. But we always were, and we still are, primarily front office. I think that it just depends on the data set. I think that though, front office people are in the meat of the transactions day to day, and our data is very granular transaction data. Like they're looking at individual comps, and that's what matters in getting deals done. And the back office people are aggregating data and making sense of it more broadly. I think that if anything, I think this industry is becoming I don't think it's about taking data from back office to front office. I think generally the back office is getting much bigger in this industry than it used to be. It used to be like all front office making decisions either based on data or based off of gut with very little back office. Now there's a lot more back office supporting the front office. So maybe it's more back office, maybe it's more front office before because a lot of those decisions were made on gut. But at the same time, just generally, there's going to be more data used across the board, I suppose.
Yeah. LD, let me ask you a different question, and that's around kind of lessons learned, right? So in some respects, there's kind of the haves and the have-nots around data, around investment in technology, around investment innovation. We're seeing a lot more of the bigger players who are investing heavily, whether that's through the VCs or directly into technologies. We're seeing adoption of different tools around analytics and innovation. But we're also seeing a huge component and portion of the ecosystem who either don't have the means, the scale, or the interest in doing so. What do you think? I mean, what's the message? What are the lessons learned for some of those who aren't able to or haven't invested in technology? What do you think the message would be for those organizations going forward?
I would say, first of all, it's not your fault you're in that position. It's the fault of companies like myself who haven't made it available to you yet. And that, I think, is a very important thing to say. They've been asking for this forever, right? It's not that, I always joke that, the real estate industry is not a bunch of idiots here. These are really smart people. And if you give them value, they're going to take it with two hands. But if you sell them bullshit, they'll tell you exactly what it is, right? They're just allergic to it. And it's an industry that just hasn't been able to get what it wants. And that's just real. They have very specific problems, very specific questions, and they haven't seen solutions that are able to answer that in the right way. And we're able to answer the solutions, here on call for the big organizations. Why? Because they have a lot of money. They have the strategic wherewithal to make the investment, and they know that they're going to get an extreme return on that investment. It's worth their time and effort, both in the back office and the front office. I would say that breaking down those silos is even more, part of their core. The smaller folks just can't afford it. And it's our job as an industry to be able to say, okay, given that you're not big enough to be able to spend what we know is needed to be able to really add the ROI that you need, how are we able to shape that experience for you such that you can get that same type of value without that? And that's something we spend a lot of time on. I don't think that, this trend of having every single asset manager also become a venture capital firm is necessarily one that's going to show the returns that they think. I see why one would do that strategically, and I don't think it's a bad idea, but I don't know necessarily going to return the yields that they expect on some of those funds. And I think what's a lot more interesting for those folks who are trying stuff out right now is there are a lot of really cool solutions right now that weren't available a couple of years ago. I mean, just the technology firms building on top of Cherre that are able to build really amazing solutions I couldn't even dream of just a few years ago. Start using them as the end user. Start testing things out. You can get a lot of stuff for free these days and figure out what that world looks like. And start trialing with companies in a safe manner, in a way that doesn't jeopardize what you're doing, and make it very clear what you're expecting at the end, right? Be willing to experiment, be willing to have a good, clear answer at the end. I think there's some really good answers, because a lot of these big firms that, seem obvious that they invested a lot of money now, we all know they start a lot smaller with some of these endeavors. And those small endeavors they started with as kind of a proof of concept that later led to something huge. those proof of concepts were immediately accretive to those companies, and they'd be immediately accretive to the smaller companies as well, without going to the next step of, oh, well, now I want to connect everything. Okay, start with these 3 things. That's enough ROI. Is that good? Yeah, so let's start there. So don't think of this as an all or nothing. Don't think of this as the haves have a lot more, because they do. The question is, what can you have more than you have today? Getting more. That's the only thing you need to do.
Great. So let me ask a little bit. Ask about the partnership model, right? So one of the interesting things to me has been the level of collaboration across the quote unquote Proptech players, right? And organizations that in some respects you might think of as being competitors, oftentimes are collaborating, whether it's on a client or in the industry, and sharing data and sharing information and building interconnectivity and so forth. LD, I mean, let me just sort of start with you on this question. Why is this? Why has this been the case? And why do you think it's important?
First of all, we're all stronger together. I mean, just generally when it comes to data. More data means better data, but it hasn't come from folks like Michael and myself. It's come from the clients. The clients went back to data vendors and said, I need this, this, and this. And I need to be able to answer a question that up until now, it just wasn't available to me to be able to answer. So that's really been the biggest driver around that. It's not been a lot on my end. I wish I could take credit. It's really been coming from the clients. And our job in the middle is to say, okay, the pie is so much bigger when clients are able to access 3 or 4 data sets together at a time than one at a time, that we make all a lot more money as an organization, right? All these different data partners, every one of our data partners makes at the end of the day, even if they don't today, will make more money in the future, especially the ones that we just started with. And I think that kind of concept always leads us to want to cooperate together, especially since there's a lot less competition directly than it sounds, right? There's a lot of competition for mind share sometimes. There's very little competition at the end of the day for the product, right? Michael doesn't really have a lot of competition out there like it sounds. There's very little. And the reason there's very little is because we all kind of found what we do really well. If you want comp data, there's one really good source for that. It's not that easy to collect, as Michael can tell you. He's not going to overnight invent a new source like that. And therefore, somebody who doesn't have access to that data asks himself, well, do I want to cooperate with them and get that data right now, today? Or do I want to spend 10 years and theoretically maybe, why would you even think that way, right? Is my value proposition going to be to go collect that from scratch? Or is my value proposition what I really want to do for my client, add some kind of value? I think that dynamic has really shifted, and I've seen incredible reception in this market. There's very little folks who've kind of been entrenched, and we know the names and we know the reasons, but the vast majority of the market is working together right now because the clients are forcing them to.
Right. Hey, Michael, question about the Proptech industry. I mean, leading up to 2020, we saw record levels of investment in Proptech. Obviously, that's been a different trend this year, but what do you expect for 2021 and beyond? Do you expect that we're going to continue to see significant investment in the property technology space?
I think so, and I hope so. I think that it's interesting. I mean, I've already, we've seen, I can tell you that I've received, more emails from investment bankers than ever before this year, and it's like, hey, I want to tell you about Project Orangutan. Orangutan, do you want to buy this company? And so there's definitely companies that are struggling now who are looking for opportunities. I think, even more than investment, we're going to see more consolidation, and then I think, but there will be more investment. I think that there's what we saw in the past in PropTech was like a ton of seed funded companies, very few Series A's, almost no Series B's, and basically virtually no Series C's or D's, etc. So now you've got a few more of the post Series A companies that are going to raise additional rounds, and that'll make a big impact, I think, on the industry. And then, you're going to see a bunch of those seed funded companies wash out, which I think is going to probably create a little more sanity in the market. The other thing that's happening too is like all of these PropTech funds, anybody who starts a new fund has to prove themselves with pre-seed and seed. Once they prove themselves in some capacity, then they raise a bigger fund, and then they start doing A's, and then they raise a bigger fund and start doing B's. And so what's going to happen is, by virtue of that, they've got to deploy capital, they've got to write bigger checks. So there's going to be bigger investments in those companies. But then there's also, as another result, it means they're not going to be writing as many small checks. So there's just going to be, I think, fewer of the seed funded companies. It's going to be harder for the really small companies to get funding, and maybe a little easier for more established companies to get funding because there's more vehicles to fund them. So it'll be interesting to watch. This phase will probably be more impactful because it'll be concentrated in fewer players with bigger checks.
Yeah, great. So let me ask the last question to both of you. We were going to try to sort of keep this to approximately 45 minutes, but I did want to sort of, again, ask you both to kind of look into your crystal ball and maybe share with folks what you see as a notable prediction. What do you expect to see in 2021? LD, we'll start with you.
I have no clue. I'm not really great at predictions. I find that almost all punditry ends up being wrong, so I hate being wrong. Clearly, we're going to see a lot more use of data. I mean, we've seen it so far in the last year. We've seen it accelerate in ways we all obviously expected, but we're also very happy to see that it played out as we expected and saw the acceleration of this last year. And we're going to see a lot more usage of data. We're going to see a lot more folks outside of the real estate industry come share their data within the industry, because now that data can be made available through certain pipes for insight. We're going to see a lot more interesting data points coming in. And it's going to make those data points in the industry that have been kind of the bedrock for years, 9 at least, are able to be more powerful and more valuable to clients. So I think that's clearly something we're going to see over the next year.
Great. Yeah, and of course, if you're right, everyone remembers. If you're wrong, everyone forgets. So feel free to go out on a limb. Michael, let me ask you the same question.
I think you're going to see, as I mentioned before, more consolidation. I think you're also going to see more partnerships and more deals at the intersection of different asset classes and different industries, right? So you're going to see big companies in the financial space partnering with Proptech companies, people who are looking at different types of risk, consolidating data sets together to make sense of them. I think that people looking at multiple asset classes against each other because people want to diversify and look at data more broadly. So I think that'll be interesting. It'll be, less about, how Cherre and CompStak work together, and more about how, whoever it is, Google or Microsoft or somebody like that, and name XYZ Proptech company, or maybe somebody a little smaller than Google or Microsoft, but still very big, or whether it's a big financial firm or, partnering with companies like ours and taking on big initiatives. I feel like there's just a lot more broad interest across the financial and data and technology space where everybody's trying to find ways to tap into this ecosystem.
Great. Well, good. Well, we'll leave it there. LD Salmanson from Cherre, Michael Mandel from CompStak. Thank you both very much. And thank you for all the participants who joined today. And we look forward to continuing the discussion. Please feel free to reach out to any of us if you'd like to chat more about it. Great. Have a great day. Thank you.
Have a good one.